Did you know that the value of your money can change dramatically from one country to the next? Imagine going on vacation and realizing that your dollars don't stretch as far as you expected. That's the power of exchange rates, and it's more than just a travel concern. It's a core element in the world of international finance. Let's break down how exchange rates shape economies, trade, and even investments, and why understanding them is crucial for anyone involved in global markets. Now, before we dive in, let's clarify that this content is for educational purposes only. We're not endorsing any particular financial product or service here. Always consult a certified financial professional for personalized advice. Exchange rates, the value of one currency in relation to another, might sound simple at first, but they're at the heart of a complex web that influences everything from trade agreements to the price of goods you buy abroad. At their core, exchange rates dictate the flow of money between countries, impacting how businesses and governments engage with the global economy. But what makes exchange rates fluctuate so much, and why does it matter? The truth is, they're driven by a mix of factors: supply and demand, interest rates, political stability, and global events. A sudden change in exchange rates can shift the competitive advantage of entire countries. For example, let's say the US dollar strengthens against the euro. Now, US companies exporting goods to Europe will see their products become more expensive, potentially reducing sales. Conversely, European goods become cheaper for US consumers. So, what does this mean? It's all about the delicate balance between supply and demand, both for currencies and for the goods tied to them. Here's where things get interesting. Liam, an investor based in New York, recently invested in a European tech company. When the euro dropped against the dollar, the value of his shares decreased, even though the company's performance hadn't changed. This isn't unusual in the world of international investing. Currency risk is a crucial factor to consider when diversifying your portfolio. As an investor, understanding exchange rate movements helps you manage the potential risks and rewards of your investments, especially when dealing with foreign assets. But exchange rates are not just about currency traders or investors. They also play a vital role in international trade. Let's say you run a business importing electronics from Japan. If the Japanese yen strengthens against your local currency, those products will cost more to import. The result? Higher prices for consumers, which could reduce demand for your products. On the flip side, if the yen weakens, you might find yourself with cheaper goods to sell, increasing your competitive edge. Governments also monitor exchange rates closely because they impact everything from inflation rates to unemployment levels. Countries with weak currencies may see inflation rise as the cost of imports increases. This can lead to a rise in domestic prices, potentially hurting consumers' purchasing power. Now, let's get into how exchange rates are determined. There are two major systems, fixed and floating. A fixed exchange rate is pegged to another currency, such as the US dollar or gold, and stays relatively stable. A floating exchange rate, on the other hand, fluctuates based on market forces. The most common system today is floating, with currencies like the euro, yen, and British pound shifting daily due to market demand. But here's the thing. This constant fluctuation can have major implications for financial markets. Take Henry, a US-based business owner who exports high-end furniture to the UK. If the British pound strengthens against the dollar, he'll make more money on every sale. However, if the pound weakens, his profits will shrink. And that's just one small piece of the puzzle. Countries, corporations, and investors must account for these shifts to make informed decisions about everything from pricing to risk management. And here's where the plot thickens. Central banks play a key role in managing exchange rates. Through monetary policies such as interest rate adjustments, central banks can influence their domestic currency's value. When the US Federal Reserve raises interest rates, for example, the dollar tends to strengthen. This is because higher interest rates attract foreign capital, which increases demand for the dollar. For businesses and investors, understanding how central banks affect currency values is vital to anticipating market movements. You might be wondering, how do exchange rates really affect my day-to-day life? Well, whether you realize it or not, exchange rates are everywhere. Have you ever traveled abroad and been shocked at how far your money went or didn't go? That's the direct effect of exchange rates on your purchasing power. Similarly, when you buy goods imported from other countries, the exchange rate can impact the price you pay. For example, if you're shopping for a new phone and the US dollar is weak against the Japanese yen, the price of that phone might be higher than you expect. Understanding exchange rates also opens up opportunities. Let's say you're an investor looking to tap into international markets. By studying currency trends, you can identify where to place your investments, optimizing your portfolio to capitalize on favorable exchange rates. But beware, currency fluctuations are unpredictable and the risks can be high. Successful global investors often hedge against these risks through financial instruments like currency futures or options. The bottom line? Exchange rates are a critical factor in international finance, impacting everything from trade balances to investment returns. A firm grasp on how these rates work and how they're influenced can provide you with a strategic advantage, whether you're a business owner, an investor, or just someone who likes to travel. What's the most surprising thing you learned about exchange rates today? Drop your thoughts in the comments below. I'd love to hear from you. If you found this breakdown helpful, make sure to hit that like button and subscribe to Factful Finance for more financial insights that can help you take control of your money. And if you're ready to dive deeper into how exchange rates influence global economies, there's a video coming up that's going to blow your mind. Stay tuned. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance.